Truworths is expecting little to no growth for its half year. The retailer says headline earnings per share are likely to be as much as 4% higher. This update comes alongside a trading statement for the 26 weeks to end December. During the period, group retail sales increased 8.2%. This was led by a strong performance by the group's office division in the UK. That showing helped soften challenges on home ground. Truworths Africa faced poor economic conditions where high interest rates led to reduced disposable income and weak consumer confidence. Troubles at South Africa's ports also weighed. As a result, sales at that unit fell 0.3%. The company will open its books on the 29th of February and more detail will be provided. Shoprite and Woolworths will beat earnings forecasts and increase their market share this year. That's according to asset management behemoth 91. The firm believes the reduction in load shedding will put the retailers on a strong footing. The interest rate outlook also bodes well for them. South Africa's energy sector is set for a boost. The Minister of Electricity, Kgosientsho Ramokgopa, has issued a determination in the Government Gazette for the procurement of 2,500 megawatts of nuclear power. Now that this has been done, government can open a bidding round. According to the determination, Eskom will be the generator of the energy produced, but may do so in partnership with any other juristic entity. MP Dipuo Peters, meanwhile, has failed to block her suspension from Parliament. That's as her urgent High Court bid was dismissed with costs. She's been suspended from her seat in all parliamentary debates, sittings, committee meetings, functions and operations for one term. This takes effect tomorrow. This ruling comes 3 months after the Joint Committee on Ethics and Members' Interests considered a complaint against Peters and found that she had breached the Code of Ethical Conduct in her former portfolio as Transport Minister. In international news, Ryanair trimmed its profit forecast for the year to end March after some online travel agents stopped selling its flights in December, forcing it to cut fares to fill seats. Here's more detail in this package report.
Ryanair cut its profit forecast on Monday for the year to the end of March. The Irish airline made the update after some online travel agents stopped selling its flights in December. The move forced the budget carrier to cut fares to fill seats. Ryanair said it now expected an after-tax profit of up to $2.1 billion for the year to end March. The figures were down from its November forecast, but would still beat its previous record. The airline said Christmas and New Year loads and yields were weaker than previously expected. It blamed lowering prices in response to the sudden removal of flights from certain websites in early December. Some online agents stopped selling the airline's flights following a number of court cases taken by Ryanair. The carrier accused the sites of adding illegitimate extra charges. But on Monday, it said the impact of the travel agent's move was already beginning to fizzle out. Separately Monday, Ryanair boss Michael O'Leary told Boeing he could take over any orders for its MAX jets that are cancelled by US airlines. Orders by carriers including United Airlines are in doubt following development delays and the mid-air blowout on one of the planes earlier this month.
And crisis hit Chinese real estate developer Evergrande has been ordered to liquidate. Here's our reporter Darling Lochela with more of the detail.
That's right, Zinati. Evergrande has been in trouble for years, and as of today, it will be wound up. That's a decision of a court in Hong Kong. Joining me now to unpack the news is Lars Halter from Deutsche Welle. Thanks for joining us today. Now, Lars, what's the latest from the court, and what will happen moving forward?
Thanks for having me. Yes, indeed, Evergrande is going to be liquidated. It will have its assets sold if, and that is not quite clear yet, if the government in Beijing recognizes a liquidation order issued by a Hong Kong court. That is not a given, especially since most of the assets here in question are situated in mainland China. And we'll have to see about reactions from the Chinese government. But if things go through, a liquidator will sell Evergrande's assets, and then we'll have to see who can even buy them? Other Chinese developers have also gone through some hard times. Evergrande is not the only one that's basically bankrupt. It is just the biggest company in the field here. Also, by extension, it is unclear if and when those buildings will be worked on again, when they will be finished. Although Evergrande Vice President Xiao En just said that the company will be working hard to, quote, ensure that homes under construction will be delivered to customers.
And I guess the question on everyone's mind is whether investors will get their money back. What's the word from your side?
Oh, that'll be tough, and it's unlikely because most of Evergrande's assets are these buildings and there is no liquidity. A recent analysis by Deloitte estimated a recovery rate of 3.4%. But then there were also some investigations into crimes and mismanagement, so then they lowered that number to only 3%. In fact, before the weekend, Evergrande's dollar bonds were bid at around 1 cent on the dollar, so there is not much optimism there. Investors are likely not getting much back in the end.
Lars, lastly, what does this all mean for China?
Well, it's a major problem for China for two reasons. First of all, China needs these buildings finished. We've seen this urbanization over the past years, even decades, where millions of Chinese moved from the rural areas in the country into the cities. And many Chinese there in those large cities are desperately waiting on their apartments being ready, many of which are already paid for, or at least partially paid for. But also looking at the country's economy, the real estate and development sector, as well as construction, was an engine to China's growth. We've seen double-digit growth there for years, and now it's been down last year just above 5%. So for many countries, that would still be a pretty good number. But compared to China's past and what the world is expecting from China, that is a very low number. Stock market there is a 5-year low too. And now with the Chinese economy weakening even more, that could even affect the world's economy. Because even with the de-risking strategy that we see in the West, where many of the countries here are trying to get less dependent on China, we have to just accept the fact that many companies and many countries still do depend on China for a lot of their business, some for supplies and some for the country as a market.
Lars, let's leave it there. Thanks for your time and those insights. That was Lars Halter from Deutsche Welle.